market blows through 1.272 but then stops at 1.618. Again, these are on disk 5 and 6. These tactics that I'm describing right here. Another way to do it, which would be equally valid in my mind, would be to take this little blip up here down to the next low, same type of setup. The difference here is it doesn't quite get to the 1.618. So the market comes up to the 1.272 level, closes right there, tags the level again, so you have a setup to trade short at 95.48. Hopefully by now you can see why there's no way I could put a video out that shows you these levels ahead of time. So how would you trade something like this? Well, as you're watching the market move up, first of all, you'd have to have the plan in ahead of time. You'd have to say to yourself, okay, as the market moves up into resistance, what signs are there going to be that will tell me I'm getting to resistance? So what you could do is come over to a piece of paper and list them out. Number one, you could look for the 3-bar reversal. Number two, we could look for the sneak attack. And number three, we could look for Little Dipper. Now again, these are inside of the kit. These are disc number 5 and 6 is where I cover these types of tactics. So before the market ever gets here, you want to be doing this. So 5 o'clock Eastern time or whenever, you want to sit down and say, okay, I'm looking for this area to be resistance. If I see one of these 3 patterns, I'm going to go ahead and go in and trade. Then you have to understand, well, what do those patterns mean? Well, remember, a sneak attack is where the market moves down and then blows through a prior high very, very quickly. And we see that this happens in just 3 bars. So the market moves down and blows up very, very quickly. That would be the sneak attack. Next, you'd say, okay, well, what about the 3-bar reversal? Well, a 3-bar reversal would be if the market comes up here, tags resistance, and then you'd go through and describe the 3-bar reversal. Little Dipper would be where the market comes up, tags resistance, trades down, and then trades back up. And I look to trade at the 61.8 retracement, or if the market can only get to the 38.2, then I know I can trade below the low. Again, I'm going through these very, very quickly. These are on discs 5 and 6. So again, if you didn't get in on that particular trade, it's perfectly understandable why, although there was a tradable opportunity up there. That's not always the case. Now let's take a look at the buy. Okay, so the market came down. This is right about 4:30 or 5 o'clock in the morning Eastern time. And we did get presented several different buying opportunities. You can see over here on the hourly chart what that looks like. So the market is now coming down. And there are 2 very large bars down into resistance. And remember, wide range bars, those are the warning signs. That is what tells us, okay, we need to step aside.